I'm Charlotte McLeod with investingnews.com, and here today with me is David Erfle, editor and founder at Junior Miner Junky. Thank you so much for joining me. Great to see you.
Great to see you too, Charlotte. Always great to talk to you, and thanks for having me on again.
Of course, really good to be catching up with you, especially because you've just returned from the Precious Metals Summit up in Beaver Creek. I didn't get a chance to attend this year, so I was hoping we could start by talking about the sentiment there, some of your takeaways, just a general feel of that event for you.
Yeah, it was interesting. I was going expecting it to be a lot more morose than it was, because the sector is in such a downtrend right now, and there's just not a lot of interest in juniors. And this is a junior specific industry only conference, but there was, a lot of hopefulness, optimism. They understand how the sector works. These are mining professionals. The companies that have plenty of cash in the bank that are cashed up through next year or even well into next year, they're continuing to keep their nose to the grindstone. They have access to capital also. So, and they know they have high margin, really good projects. So they weren't as morose as some of the other companies that need financing. Those are the companies I feel sorry for, especially the companies that have really done a good job in putting as much of their capital into the ground, coming out with good results, but it's just not rewarded in this market. So they're very frustrated, and I see a lot of them now open to merging with equals or monetizing some of their assets maybe, instead of having to dilute down here, because a lot of these companies, they're trading at less than 10, 15 cents. And if they're forced to dilute, their shareholders down here with a private placement and a full warrant, I mean, it's not very attractive to them, and it's really not attractive to their shareholders. So I feel for them, but, M&A needs to take place in this sector. It's needed to take place ever since I've been in it for the past 20 years. And every time we have these bear markets where the sentiment gets this bad, and it usually, the gold price finally starts to take off, and a financing window opens, and a lot of these lifestyle companies continue to hang around because they get financed, and they just need to go away. I mean, let's face it, about 80 to 85% of this of the junior space, the companies just aren't viable. They're not investable. So that's just the way it is, unfortunately. But I'm hoping that this M&A takes place now while the sector's like this. We're starting to see some M&A in among equals in the junior sector, but really not that much.
Okay, I think there's a lot of different things that we can pick up on there. And where I kind of want to start is with these juniors in the precious metals sector. What is the best path forward at this moment? What do you want to see companies doing? Because it sounds like they're really between a rock and a hard place here, where you can spend money, you can do some work, but probably that won't get the market reaction that you want. Or you can sit there and have money, but then you're not doing anything. So what do you want to see there?
Well, I mean, as you would expect in a market like this, there was a lot of corporate interest at this conference. Many of the companies that I talked to, the corporates, the producers that they spoke with, they're looking to replace ounces, 4 to 5 years out, and so now they're shopping now. And there's also a lot of strategic interviews. Strategic interest in a lot of these companies. So what we need to see is more strategic interest in a lot of these companies. Major miners taking 9.9% or 19.9% stakes in these companies to also fund them at the same time. And I think you're probably going to see that come out of these conferences. But what I'd really like to see is M&A of single asset producers, because a lot of these single asset producers that have done, yeoman's job of de-risking their multi-million ounce deposits in safe jurisdictions. They've done a good job of raising money at the right times, keeping dilution to a minimum. But the stocks continue to be sold, and now a lot of them are at the feasibility stage, or they're at the construction stage even, and the finance stage, and their market cap is 2 or 3 or sometimes 4 times less than the equity they're going to have to raise to build the mine. So what I'd like to see is several of these companies merge, where you have one company with a handful of these projects, maybe $150, $200 million in the bank, access to capital, and also tackle on a big board U.S. listing. And then you're more liquid, you're more attractive, because there's only so many checks these financiers can write, and there's just too many companies, too many projects held by these juniors. So I'd like to see M&A in the single asset developer space.
Okay, that's very interesting. So you want to see these single asset developers, producers getting together, talking more about mergers of equals. Do you also want to see that down at the exploration level as well, or is that less interesting for you?
Absolutely, it needs to happen. I mean, a lot of these companies need to be merged, and the ones that don't have viable projects need to go away. During the .com burst, right, and that was when the gold sector was bottoming in a similar circumstances right now, to where volume's really low in these companies. There's no interest whatsoever. The last time the volume was this low on the TSX Venture was when gold doubled to 250, and that was around the turn of the century, right after the .com bubble falls. But right before it, a lot of these companies turned into .com companies, miners, and when that happened, that signaled a bottom. So there's lots of signs out there that a bottom is taking place. If you look at sentiment, you look at historic comparisons. If you look at the GDX, ever since it had a cumulative bottom in late 2015, when the gold price was threatening to break down below 1,000, it didn't. It bounced, and the GDX had a major bottom in that time frame. Well, the GDX every August, September time frame since then has either made a significant top or a significant bottom in the August and September time frame. So I think that's happening right now. And there's also a lot of evidence as far as sentiment is concerned, for that matter. The volume, like I said, is drying up. There's just no interest. Your generalist investor has left this sector 10 years ago, 11 years ago, and is yet to return. It's just basically, all of us junior resource speculators trading amongst ourselves. And when that takes place, the games on House Street and Bay Street really start to take place, because there's these financings that take place, and they know that a company's shopping for a finance, they need money, so games start to be taking place in their share prices, and things every news release becomes a liquidity event to sell the stock. So if you're a junior right now and you haven't reached the feasibility stage, and you've got less than $10 million in the bank, you're susceptible to these games. You're susceptible to your stock being sold off. I don't care what your news release said. You come out with barn burner, bonanza grade results, they're going to get sold, because the market knows you need to raise money. And even if the market knows that you need to raise money, and they like the results and they like the viability of the project, look, they're onto something. They're going to sell the stock and wait for the financing to get into the finance and get a free warrant along with it.
Yeah, it paints kind of a sad picture when you talk about everybody in the junior resource sector just trading amongst themselves. That's a very interesting picture. So I want to talk a little bit more about what's going on with sentiment, because of course, all of this is happening as we have still a pretty historically high gold price. So maybe we can talk a little bit about that discrepancy, because I think from people who are in this market, they're looking at the gold price. It's been pretty disappointing.
Yeah, it's especially for the juniors, because you take a step back and you look at the big picture gold price. It's got that beautiful cup and handle. It's in a bull market, but if you take a look at the juniors, almost all of most of them, there's been, there's been a few that have bifurcated higher, but most of the juniors, you have to turn those charts upside down for them to look the same. So, and the reason for that is there's several reasons. The big reason is basically the gold price has gone nowhere for 3 years. Right? I mean, it ran up to resistance at $2,000 in 2020. That was where it almost ran up to in 2011. It came $75 from resistance at 2,000 in 2020, and in 2011 it ran up there again in 2020, and it's tried to break out 2 other times. And after each failed breakout, investors get more and more discouraged. So, with the gold price going sideways and inflation going up so much, the all-in cost of production has gone up. The price to explore for it, the price to build a mine, everything, all those costs have gone up, yet the gold price has gone nowhere. And the stock market continues to go higher as well. So if I'm a generalist, I'm like, there's no need to be defensive. Why do I want to be in gold? B, I'm getting 5% on a T-bill. Why do I want to be in gold? C, the stock market, the AI stocks, I'm going to be in AI stocks as they keep going up, and they're going to go up forever. So I'm going to stay, I'm going to keep making money there. So why would I want to mess around with this high risk sector where what they're trying to find is that the price of it is going nowhere? But herein lies the opportunity, and this is why I love bear markets in this sector, because in bear markets, it's really, because let's face it, the great projects are always going to get financed, they're always going to get built, and many of them are controlled by these juniors. So, and in bear markets, you could always tell the strong companies from the bad companies. You can always tell the wheat from the chaff. I mean, they stand out. But in bull markets, it's much more difficult, because in bull markets, everyone's getting financed. Even crap results are being rewarded. It's really difficult to get into the right companies. It's more difficult to get into the right companies. But in bear markets, it's much easier.
Yeah. Yes, exactly. I think it's good that you point that out, though, because I see people in our comments section, for example, who are getting a little bit sick of this, but it is important to remember, this is the time where you do have those opportunities. I also think, it's interesting how you're talking about the gold price moving sideways. And because I find that when I'm talking to people about what's going on with gold, if you start to say something like, well, maybe it hasn't done as well as people thought, or it's not as high as people would like, usually right away, you kind of hear, wow, it's historically high, it's holding up well. So interesting that you took kind of a little bit of a different approach there.
Yeah, I mean, it is holding up well. I mean, when you consider where the 10-year yield is even right now, the last time the 10-year yield was this high above 4%, the gold price was threatening to break down below 1675. It actually did break down below 1675, but it turned out to be a bear trap. So gold has held up well against strong dollar. It's held up well against yields going higher, bond yields going higher. Of course, and the reason why it's done so is because these central banks continue to buy so much of it. And I consider central banks smart money. So smart money continues to buy gold, where you have the retail investor continuing to sell it in the ETF. So you're seeing ETFs, buying needs to pick up. So when the ETF buying, matches or starts to come in with the central bank buying, I think that's when you're really going to start to see gold move. And, the gold price has been creating a floor at 1900 for the past 6 months. I mean, it ran up in March with that big white candle based on the regional bank crisis in the U.S. being introduced. And now it's created a bull flag alongside of it. And it's trading between 1900 and 2000, while interest continues to wane on the retail side. But in the central bank side, interest is perking up even more, led by China and Russia.
Right. So we need those two elements to kind of start moving in tandem again. So yeah, and when it comes to gold, I want to also make sure we check in on the Federal Reserve because we had recently the latest meeting. And I want to get your take, I think, on their dot plot projections. So, what it looks like they're thinking is going to happen is we get one more additional hike in 2023. And then heading into 2024, that looks like when we start going back down with it looks like two rate cuts. So, want to get your thoughts and see what you think of that positioning.
Well, it's the Federal Reserve. They have to continue to maintain this higher for longer attitude, and I understand why. And the stock market's held up really well during their interest rate hike cycle, which is historic. I mean, it's gone up 550 basis points in 18 months or 16 months or whatever it is. So, that takes a while to get into the system. There's a lag. So, but as far as, the market, having faith in the Fed being able to get inflation down to that 2% target, I think the market losing faith in the Fed being able to do that is another reason why the gold price is holding. Because this is the same institution that told us for a year that inflation was transitory. So we're supposed to believe these guys are going to be able to maintain rates higher for longer while the U.S. government's budget deficit goes from 1 trillion to 2 trillion. The national debt goes over 33 trillion. The interest payments on the debt now, which is, by the way, cumulative interest on that 33 trillion of U.S. deficit is interest payments. So, there's no way that they can keep doing this because there's no way these central banks can continue to borrow without any intention of paying back. And the bond market is starting to signal that. So, saying what they're going to do and doing what they do are two different things. So, I think the gold market is starting to call their bluff. And if it's doing so slowly. We still need that breakout above 2,100. There's 3 times now, and it usually in markets it's 3 times trying, and the 4th time is usually successful. And the way the gold market is shaping out on a monthly basis, it looks like that's happening. I mean, we're about to end the quarter here. I know Friday is kind of big. We've had a lot of data coming out this week in the U.S. To affect the gold price, but Friday we have the UAW, the auto workers strike. That's huge. This is the first time all 3 of them have struck at the same time, and these people are really organized. And what they want and what the automakers are offering there's a big chasm. And Friday, they've already announced that if there hasn't been any progress made in the talks, they're going to strike. They're going to strike in other areas. So. That's not good for the economy. That's really bad. And as far as the government shutdown is concerned, they're already preparing for it because they're so the chasm is so wide between the two, and that's September 30th, which is on a Saturday. So the following Friday. I mean, that is a good for the gold price that those things pan out. I'm not certainly rooting for that, but that is a reason that investors now with the stock market coming off, we have to get these investors to start becoming defensive, which they should be anyway. Before we see investment capital coming into gold stocks, watch the chart of Newmont. There's a lot going on at Newmont right now. They cleared the last regulatory hurdle. And now they're just waiting for a shareholder vote to see if this merger is going to go through. It looks like it's going to. The stock price has gotten over 40, which became resistance after it broke that support a while back, and now it's trying to hold that support. And if Newmont gets over 45, that's a sign that you're starting to see more generalist investors coming into the sector because Newmont is. Once this deal takes place, it's going to be in a class by itself as the largest gold miner on the planet. I mean, Barrick's will be number 2, and they're going to produce almost twice as many ounces as Barrick.
Okay, okay. So if I kind of start to try to put all this together for gold, we need for the price to increase. We need to see this retail interest come back in to join the central banks that are already buying. The retail interest perhaps gets triggered by people realizing maybe the Fed isn't actually going to accomplish what it says. Recession fears. Yes, okay. And yet, these soft landing hopes, expectations seem still pretty persistent, even as we have Powell this past week kind of telling us, don't count on that. So when do you think,
Yeah, as the oil
yeah,
price goes towards $100 a barrel, right? I
yeah,
mean, how are you going to keep inflation down when oil keeps skyrocketing? And they can't control that. Because OPEC is, they're pulling back production to get the price higher. So the Fed can't control that. Fed can't control what the government spends, which was out of control. So yeah.
yeah, yeah, okay. I think that helps to give a pretty good picture. And the other thing that you often help us out with when we're looking at gold is kind of the upside and downside levels for the metals. So, what do you think we're looking at? I guess out to the end of 2023, if we can really look that far. I'm not sure we can.
Yeah, well, it's in 1900 is basically critical support right now because it's been creating a floor there, like I said, for the past 6 months. But if you take a look at the 200-day moving average, it continues to rise, and we're talking about gold futures here, not spot gold. So that has been tested a few times, and it's bounced off 200-day moving average support. I think 200-day moving average in gold futures now is around 1932. It tried to get above 1950 this week, which was initial resistance, and came back down today. Yeah, 1900 is the number to look at. And if we lose 1900, then you look at 1800, 1850 area of support. And the resistance now, the initial resistance is 1980 in gold futures, and that magic 2000 number. I mean, if something happens next week to where we get a quarterly close above $2,000, that would be huge. That would send a lot of signals to this tiny sector, to hey, momentum traders, get ready. We need to get into this. We need to get into this market now. It's been beaten down enough, and it's about to break out. It's about to take off. And some of these juniors will really, you would really see some sharp moves in some of these juniors, because Charlotte, with what's taken place the past several months in the junior space and in the mining stocks, if you took the entire mining sector and put them into one company, their market cap would be less than Home Depot, which is $380 billion. That's how small this sector is. So this is why we love the sector so much, right? Because there's so much leverage on the upside, of course, and on the downside too, which is when you need to be accumulating in times like these. Sure, you accumulate on weakness and the stocks get weaker, but you just have to have a lot of patience. And it always turns around. It usually turns around with a spark, and you see a sharp move up when it's this depressed. I don't know if it's going to be that way this time, but I'm definitely ready for it, and so are my subscribers.
It's good to have that reminder, I think, of the market size, because certainly for me, I get very immersed in what's going on, and you kind of start to think it's the whole world, which is not true at all, really. Yeah.
So many people don't even know this sector exists.
Yes, that's very true.
I'm at parties or something, that people ask me what I do, and they look at me with like I got a horn coming out of my head or something. What's that?
Yes. A lot of the time I tell people what is my job, and like, oh, people want to know about that. Yes, they do. Some people do want to know about that.
Right.
Oh my goodness. Okay. I think this is really a lot of good information. I'll ask you if there's any final thoughts that you want to add for investors. Maybe let us know where we can find you if we want to learn more.
Sure. I try to write a weekly column at Kitco every week, but lately I've been slacking off and not writing as much. Well, last week I was at the conference and didn't have much time to do much of anything. Usually you can find me there on Fridays, or you can go to my website at juniorminerjunky.com, and you can find me there.
Perfect. Yes, I do love those weekly columns when they're happening, but of course, if you're too busy, that's also okay. So this was really good. Thank you so much for coming on to talk about what's going on with gold and for giving your overview of the Beaver Creek event. That was really good for me.
Me too, Charlotte. Thanks a lot for having me on.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is David Erfle with Junior Miner Junky. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.